everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back to the program. My guest is joining me right now virtually. He's Ugodre Obi-Chukwu, the founder and chief executive officer at Nairametrics. Hello, my friend. Good morning, Ugodre.
Good morning, Nancy. Good to see you.
Good to see you. Can I see? Yes, yes. Good to see you, Ugo. What's happened today? I guess it's a Friday. The way you are dressed, I haven't seen you like this. So
I don't know. Maybe it's Trump. Maybe it's Trump magic.
I'm telling
You
you,
never know. Trump magic is hitting everybody left, right, center.
left, right, center, isn't it? Welcome, welcome, my friend. It's been a while since we spoke, you know. But but
Yeah,
but
yeah,
but what a day for us to speak because banks have been releasing their results left, right, and center. Let's start
yeah.
on that foundation. What do you think in just 1 minute? Zenith Bank, WEMA, UBA, and all of that. What do you think about the banking space? And like I mentioned at the beginning of the show, a year to the recap process being finalized as announced by the CBN last year.
Yeah, a lot of blistering results that we've seen, record-breaking results for nearly all the banks that have released their numbers. Zenith, UBA, GT, which are the three that makes up the full gas. We still wait for First Holdco and of course Access. We've also seen results from tier two banks. Fidelity had a very strong result as well. Stanbic IBTC also strong. Wema also doing pretty well. So it's been resounding. I mean, we did expect some of this when we saw their half-year numbers, pop last year. They were all, they all were doing way better than they did in 2023, which, if you remember, was also a record at the time. Even though it was mostly backed by FX, but this time around, we're beginning to see numbers that are all around. We're seeing increase in their net interest income. We're seeing increase in their trading income. We're also seeing some banks also becoming better, putting better efficiency with cost to income ratios also falling. So solid numbers that in a way mirrors a lot of what we see in the country. A lot of people have reached out to me and said, how come banks are making so much money and we're all suffering? I mean, um, it's meant for the banks. When you're in a high interest rate environment, banks tend to also make money when you have the sort of exchange rate environment that we had for most part of last year. That also augurs well for banks, especially banks that are positioned themselves very well. And we all actually want our banks to do well because if our banks don't do well, then that is even worse for the economy. So it's good that banks are doing well so that at the time the economy starts to bounce back fully, which is already doing, then our banks are better positioned to drive the economic growth that we're all looking for.
Yes, because banks are really systemically very important. I remember those days, there was this phrase from the United States, I think during Barack Obama's days, too big to fail. You remember,
Yeah,
yes, you
yeah,
remember
yeah,
those days.
yeah,
So perhaps
yeah.
our banks and the tier one banks are really too big to fail. And we've seen even the posture of the central bank in the last few years adopting that attitude. Now, for me, when I've been looking at these financials, and I really took interest in that of Zenith Bank as being the largest bank in Nigeria by tier one capital.
Capital.
Yes, I will ask my team to put that graphics on air. For me, yes, let's start from that. Over 50% of Zenith Bank workforce are women. Perhaps that's why I'm interested. You know, 32%.
I thought we've gone past. I thought we've gone past Women Month already.
Every month is Women's Month, Ugodre,
Ooh, look at that.
And for me, it's about, and I think I must also admit, and perhaps you would also agree with me, that the financial sector, precisely the banks who go, has, taken it a top notch in terms of inclusion. It's as if Nigerian banks are not even within the Nigerian state, as it were, because when you're talking of inclusion, the banks are ahead. Can we get back that slide? 32% of senior roles in Zenith are female. Women now hold 30% board positions in that bank. Global expansion strategy, which they say follows business customers path. Paris office opened. Eyes on francophone countries. Of course, they're starting from Cote d'Ivoire and Senegal. 10,000 staff. And that's what we talked about in terms of being systemically important. Zenith Bank employs 10,000 staff, which I will still probe a little bit further in this digital era when people like me don't like going to the banks. Why would they still have 10,000 staff? Workforce development focuses on positive culture and retention. Then the icing on the cake there also is that the federal government is getting a slice of all of this. Zenith Bank paid 300 billion naira in tax last year. So go speak to me about that at a glance. What I've titled Zenith Bank as a glance.
One of my favorite parts of a financial statement is what you call the value added statement. The value added statement tends to show you how much value companies create and how well they allocate that value to different stakeholders. And stakeholders will range from people who supply to those companies, to government, to their employees, as well as to shareholders. And if you look at Zenith's value added statement, it's pretty clear that value creation is across that entire spectrum. And also not a surprise that they have a very strong female workforce. I think even in the early days of Zenith Bank, it's always been one of those banks that had always put women at the forefront of their banking strategy, and it's worked pretty well a lot for them. I think that the number at the moment is probably 47%. Let's also remember that they also have a female,
GMD,
MDC
yeah.
group MDC. Oh yeah, I think there are probably maybe two of them or so at the moment that are GMDs at least in the tier in the banking space at the moment. So I mean, it's a bank that's always had that culture from time, so no surprises there. And also just shows that when an organization decides that it wants to put women at the forefront of leadership or driving the business, then it's always possible. I know that it's always difficult sometimes to find the right people or to find women to come out. But I mean, if you put in a lot of effort, you probably will see them as well. I think that's probably what Zenith is doing. At least they have the resource to do a lot of that. 47% female to male ratio is not something that you see, not just in the banking sector, across the NGX, and we track this at Nairametrics a lot. So it also was a surprise when it popped up that they had that much strong female bank representation. And you did mention 10,000 employees. What
Yes.
do you expect? Don't you want them to have employees? I mean, a
No,
bank of that
I
size,
want them Ugodre, but I'm just talking in a digitally and technologically driven world now, where banks are getting
yeah.
smaller. Brick and mortar banking, it's not there as before. For me personally, if I don't, my account officers know. Uh, just I also have an account in Zenith. Let me just say that for spoiler alert. But
No, we all do.
you know, anything that will not take me to the bank, I will not. If you see me in the bank, it's a serious issue.
Mm,
So and
mm,
I
mm.
also have accounts in other banks, and I know that some of my account officers, and I've said it even on this show a couple of times, some of my account officers have left their banks. They've either jackpot or they're
Yeah,
seeking greener pastures somewhere
yeah,
else.
yeah.
So when I saw Zenith saying that they have a workforce of 10,000, I was like, in this digital era, what are they doing that they're retaining the staff? You understand what I mean? That's why I had to ask.
Yes. Yeah, so I mean, I hear you, but let's always remember that banks haven't actually closed branches at the moment. We still have the same number of branches, even though the expansion that we had in maybe the previous decade is not at the same pace as it is at the moment. But banks still maintain a significant branch presence, and banks like Zenith with total assets of almost 30 trillion. I mean, you do expect if that sort of workforce, for that kind of bank. And then digital, as much as we claim digital, moving into the digital space or digital age, I mean, people are always behind it anyways, right? So you do need to employ different people to ensure that your digital infrastructure is also working very well, and then you continue to innovate. And then there's also this new thing around agency banking that banks are also involved in. And then let's also remember that a lot of Nigerian banks, particularly Zenith, also have footprint outside of Nigeria. And so a lot of this workforce also include workforce outside the country. And so, yeah, I'm not surprised that you have a bank like this with a workforce of 10,000. Not surprised, and actually not the highest. I think that some of the other banks have. I think there are two other full gas banks that have larger workforce than Zenith.
Yeah. Um, let's talk about how that significant workforce translates to customers' experience, because many Nigerians, you are smiling, it's like, you know where I'm going to. Many Nigerians are of the view that our banks are not even serving us well, perhaps even the top tier banks, which Zenith also falls into. If we take a look at the workforce, how do you think that it should translate to better customer experience and even customer retention? Of course, I was taking a look at the asset you mentioned it earlier in terms of even customer deposit, I think in excess of 20 about 21 trillion, so what does that translate to?
I think that customer service or customer related issues permeate not just all banks. And I don't think it's just limited to Zenith alone. I think it's a challenge that you have across the country. I mean, you see this even with some of the smaller challenger banks that seem to maybe be a little bit ahead when it comes to technology. So it's something that we're still finding it very difficult to hack here in Nigeria, and a lot also has to do with digital identity, how well integrated Nigerians are with the online world. We still have, challenges with BVN. As much as we've seen a lot of improvement there, you still have, difficulty in being able to clearly identify customers. And then there are also, the different challenges we have in this country with technology infrastructure and maintenance of that technology infrastructure. Some of them still always have to resort to foreign technical partners to maintain their infrastructure. In fact, I recall a story about a bank that actually sent their entire, tech team abroad for training, and then brought them back in Nigeria. And then a few months later, they all left. All jacked back to Canada and all, and all of that. So, I mean, not trying to make excuses, for banks, because I mean they make so much money that you expect them to have a lot much better service. But I think it's a challenge that is just beyond what banks can do. It's a general Nigerian problem, but that has nothing to do with the workforce. I think that the workforce, it's fine. What I tend to look at mostly for banks is their cost to income ratio. So long as you're able to maintain a reasonable cost to income ratio, I think that that's just fair enough.
Let's take a look at the numbers. With aggressive growth, perhaps you would agree with me, aggressive growth is admirable for it being the largest bank in Nigeria by tier one capital. How how do we really ensure that this doesn't come at the expense of perhaps asset quality and prudential limits? I hope you understand what I'm saying.
Yes. Yeah, I mean, I think one common notion that some of us who invest in equities tend to worry is whether the sort of aggressive growth that we see is realistic or is not at the expense of something else that we probably do not see. And so, if you do look at some of the numbers, which I did, yes, Zenith is doing 3.9 trillion or so in gross earnings, way higher than the 2.1 trillion that it did in 2023. You also look at their earnings per share, almost 33 naira, compared to 22 naira, the year before. But then if you're somebody who is very keen on risk, then you look at their cost of risk, which is 7.3, about maybe slightly lower, about the same thing that it did in 2023, which is within industry expectations. You also have their non-performing loan ratio coming below the regulatory required 5%. I think it's about 4.7%. There are risks. There are risks around some of the oil and gas assets. There are risks here and there, just like any other bank. And they did also take sizable provision. I think about 600 billion, if I'm not mistaken, in provision for 2024. But other than that, I think the balance sheet is strong. The balance sheet is robust. They've also been able to raise additional capital to strengthen their balance sheet. So if there are banks that you would say that, look, these banks are too good to fail, if you don't want to say
Too
too big to
big.
fail. Yeah. So no, I'm not even saying too big. I'm saying too
Too
good to
good to
fail.
fail, yes.
Yeah. I think that Zenith is likely one of those banks.
If we take a look at the numbers showing on the screen now, and I'm really interested in probing the profit after tax, because Zenith Bank posted a 1.03 trillion profit after tax. What do you think are the drivers of this growth and profits?
Yeah, interesting numbers because I mean, unlike last year when we looked at looked at their numbers, it was as if most of it was driven by FX gains. But this time around, it was a lot more diverse. We saw a lot of money made from interest and loans. I think net interest income contributed close to 69% of the bank's net interest earnings, and while non-interest revenue contributed about 32% or thereabout. Of course, compare that to the year before, which is maybe about 45, 46%. So this time around, most of the money was made from from lending, and they also did also make a significant amount of money from fixed income securities like treasury bills. Let's remember that we were in a high interest rate environment last year, where a lot of uh, banks tapped into the fixed income security market, especially treasury bills market of the central bank, which at that time was offering pretty high interest rates, just so that you can keep money with the central bank. So banks took advantage of that, and Zenith was one of them. As of course, Zenith also made a significant amount of money from trading as well. And then one other thing that I also did notice with their earnings was also efficiency. They were also slightly a bit more efficient this time around compared to to a year ago, with cost to income ratio falling to at about 38.9%, even though it was slightly higher than 36% last year. But we all know what happened. If you adjust for inflation, then probably much better, because last year was significantly high. It was a significantly high inflationary environment, but even at that, they were able to come down to about 39 or so percent in cost to income ratio, where most of the industry peers were doing over 50%. So these were the major drivers of the bank's revenue. I guess the question then is this something that is probably sustainable?
Sustainable,
Well,
yeah.
seeing that we're seeing interest income as one of the key providers, notching over 60% of almost 70% of the bank's earnings, then I think we could say yes, very likely with the sort of balance sheet that Zenith Bank has, you might not see the kind of super profits or super profitability growth that we saw that we've seen in the last 2 years. But I think that you would still see that level of see them sustain that level of growth. 1.2 or so trillion in profit is astonishing. It's astonishing as they come. And I think there are only two banks at the moment that have been able to hit that 1 trillion naira mark when it comes to profit after tax. Zenith is doing 1.3 or thereabout in pre-tax
1.03,
profit,
yeah.
1.3 in pre-tax profit,
Pre-tax
and then
profits, yeah.
and 1 trillion in profit after tax. So essentially giving the government almost 300 billion naira
In
in
taxes.
taxes. Yeah, so those are very solid numbers all around, for the bank. And let's not also remember that they also are one of those banks as well that would pay windfall tax for the federal government, which we understand that some of them are going to stagger. So solid numbers all around. Despite cost pressures that they had, and because they did have cost pressures, but they did also take advantage of the economic situation in the country last year. We had high interest rate environment. We also had
Exactly,
the
Ugo.
exchange rate, depreciate.
You're bringing it out of my mouth, because that's my next question. In terms of when I take when I read those numbers, I looked at their financials word for word, detail for detail, and I'm asking myself that with all these BASBOs, monetary side BASBOs, fiscal side BASBOs, aggressive interest rate environment since Cardoso came in. You're taking a look at the foreign exchange policies introduced by Cardoso and his team. You're also taking a look at, even from the fiscal side, you're taking a look, there's a tax bill that is still hanging somewhere. Taiwo Yedele and his people, the windfall tax, which you mentioned. You're also taking a look at even the electronic foreign exchange market system window. There's a recapitalization process that is ongoing. So all of this, the gbas boast too much. So what does it say about risk? What does it say about regulation? And is there a bit, is there a slice of resilience in all of this?
Yes, and that's what I was. I mean, just to the word out of my mouth, I think Nigerian banks are quite resilient, and they've shown a lot of resilience. Of course, thanks to the central bank as well. I think the Apex Bank has also worked with them. Let's also remember that a lot of banks have also operated under what you call a regulatory forbearance, which essentially gives banks a little bit of breather with how they make provisions for their loans. But some banks have actually gone further than that to even strengthen their own risk asset management. And so, yes, there's a lot of headwinds for banks. As well, you're in an economy that is pretty in bad shape. So, a lot of companies are finding it difficult to repay loans. There's risk, to default. You're also seeing even large FMCGs, multinationals struggling under the weight of exchange rate pressures. So, seeing banks produce this sort of results also suggest, that they are pretty resilient. Um, Net interest margin for Zenith, for example, is hitting 9.5%. If you even go adjusted over the last 5 years, they usually average 7%. So you're seeing 9.5% net interest margin for the bank. But yes, this risk do exist, Nancy. Make no mistakes about it. I don't think the CBN is stupid to say that banks should raise money. They know what they are doing. They know that there are risks that exist at some point in time, which is why they are saying that banks should raise money to fortify their capital. Zenith is one of those banks that have very strong capital adequacy. I think their capital adequacy ratio is hitting about 25%, which is obviously a strong number as well. So I think that over time, what you might likely see is some consolidation among some banks. I think I'm one of those who feel like you might have some banks have to merge with, maybe particularly the smaller ones merge with the larger banks, or probably just play at the very mid-level. As as things starts to unravel, there are risks down the line. Of course, a lot of assets are still under pressure. I think Zenith Bank has also some loans that are a little bit disturbing, but I don't think it's anything that their balance sheet can handle at the moment. And it's also not just unique to the bank alone, it's also something that's unique to most of the banks that we've seen. They do all have risk assets that are a little bit disturbing, but nothing out of the ordinary, nothing that you wouldn't expect in an economy that has gone through what we've gone through over the last 2 years. So hey, let's give ourselves some slack.
Should we give the banks some slack? Should we give Zenith Bank a slack since we are discussing Zenith Bank this morning? Because if you take a look at what I mentioned earlier on, the customer deposit about 21.6 trillion, rising by over 40%. You also talked about the loans. How does Zenith Bank really ensure the quality of these loans amidst rapid expansion? Amidst also that there's a need to be able to, um, you know, build momentum amid the supporting businesses. When I was taking a look at their numbers to oil and gas loans, power, and all of that, so how do they ensure quality of these loans while they still want to undergo rapid expansion? France, Senegal, Cote d'Ivoire.
I mean, banks all have their own risk management strategy. I'm not sure it's something I probably want to elaborate too much on the call like this for our viewers due to how technical it is. But I mean, easily you want to look at certain numbers that they have, which is what the central bank expects banks to play around. You look at a liquidity ratio at 83%, way higher than I think the 70% or so that the central bank expects. This is higher than the 71% that it did a year before. And that is for the group. For the bank itself, liquidity ratio is at 48% compared to 45% the year before. Loan to deposit ratio for the bank is 56.7%, while capital adequacy ratio, I mentioned it earlier, one of the most important ratios you always want to track for banks is at 25.6%, way ahead of the regulatory required, regulatory requirement. And of course, they also have a non-performing ratio, NPL ratio, which perhaps is the number that everybody likes to look at for banks, because once you go above 5%, then that maybe suggests a sign of trouble. They also come under regulatory 5% at 4.7%. So kind of looks like yes, there are risks, but they do have solid risk management framework for things like this. I did mention earlier as well that the bank took on a significant provisioning earlier last year, and not just last year, even the year before. And it's something that we've noticed from a lot of banks. Banks that have made sizable profits have also taken provision. And just to give put out the number here, Zenith Bank is provisioning for 658 billion naira. So imagine, to put it into context, if they had not taken that provision, then their profit could have been 1.6 trillion, just to give you that same perspective. So, and they did take a provision of 650 billion. This is in addition to the 400 billion that they took last year. So you would think that a bank that has taken 1 trillion in provisioning over the last 2 years alone also understands the risk that is at hand, understands that it's important that you take provisioning early enough, even if you think some of those loans are not really going bad, but it's out of prudence that you also take some of those provisioning. Loans and advances, not of almost 10 trillion loans that the banks have at the moment. Most of their loans, of course, split into oil and gas, split into commercial banking, split into their corporate banking group as well. There are potential risks, like I mentioned earlier, with the upstream sector of the oil and gas industry. We do know of some oil and gas companies that are seriously struggling. Banks are really figuring out how to go after them. We know of the story of another bank and what's going on there. So this risk exists, and I'm not trying to water them down and see, but I think if there are banks that know how to go through some of these risks or navigate them strongly, then it has to be top on that list
Let's
for
talk.
me as an investor.
Yes, let's talk about deposit growth. And I know why I'm saying this because we've seen quite a lot of competition, as it were. But the
Yeah.
customer deposits for Zenith Bank, of course, grew significantly. I'm taking a look at those numbers now. Is this a sign that perhaps more Nigerians are trusting the banking system? Or is it simply driven by higher interest rates that are attracting more savings? You understand what I mean? The MPR, if it goes higher, that means you have higher savings rate. And I tell my viewers this all the time. At least last year that we had over 27%, you see at least your interest rate adjusting to close to 5% or even 6%. So do you think that's actually what is attracting savings?
Well, it could be. I mean, difficult to say. I'm not sure Zenith has done their earnings call yet, so because maybe I missed it. Difficult to know, to be honest. But I did look at the breakdown of some of their their deposits, and of course they have deposits across current savings account, where I think they call it CASA. Term deposit and domiciliary account as well. Zenith has always been very strong when it comes to current account deposits, and nothing really has changed. Current account deposit makes up a significant chunk of their total deposit. I think the total deposit is about maybe 22 trillion, or thereabout naira, which is solid numbers. Nancy, imagine that over 20 something trillion naira in customer deposit, which was about 40 something percent higher than the year before. Current account makes up about 9 trillion of that. Savings account, 2.5 trillion of that. So again, to your point, savings account is 2.5 trillion. So it's not like people are saving per se. But current account means that they have a lot of corporate business accounts with them. They also have term deposit of 5.1 trillion, which grew from 3.2 trillion, suggesting that you had a lot of people perhaps put money in term deposit to take advantage of a higher interest rate last year. And of course, their domiciliary account numbers is also pretty strong. And I also think that reflective of the exchange rate devaluation that we had last year, where you had a lot of people perhaps fly towards the safety of FX. And as you fly towards the safety of FX, you also have the impact of devaluation when you convert that money back into naira. For example, domiciliary account was up from 2.8 trillion to about 5 trillion in naira terms. Might not have moved significantly much in dollar terms, but if you convert that to naira, that's a significant move. So and I think the bank has also been very aggressive when it comes to deposit mobilization. You have to give it to their staff, and they're constantly always chasing deposit, always ensuring that their customers are happy. Particularly, I mean, sometimes people give Zenith some flack for this. They tend to give a lot more credence to their corporate customers or to their high net worth customers, which has really been their bread and butter. Like I mentioned, current account at 9.2 trillion. So
Okay.
yes, that is why they're able to sustain such high deposits.
So on the other hand, let's take a look at dividends and shareholders, because for retail investors who own Zenith Bank shares at this point, what can they realistically expect? Because when you see good numbers like this, you know that you're having a huge slice of the pie for, for investors. I don't know if you're a dividend, if you're a shareholder of Zenith Bank. So what should they expect in terms of dividends and perhaps even share value growth and in terms of reward for their shareholders?
Nancy, I'm a huge dividend person. I love
I
dividends,
know.
especially for Nigerian banks. Yeah, so I don't
and,
joke with
and, and of
dividends
course, they
at
pay
all.
very well, so.
Yeah, I mean, Zenith is one of the, most consistent dividend payers that you have, or that you can ever have, for any Nigerian bank. They've been paying dividend. I don't know any year that, I can't recall any year that they have not been able to pay dividend. But this time around, they did pay dividend of 5 naira per share, which is higher than the 4 naira that they did. I think 20% higher than the 4 naira that they did the year before. Um, I know a lot of investors expected a bit more dividend from them, especially when they compare with some of the other banks, and people expected them to pay more. But let's remember that we're in a capital raising, uh,
Yeah.
season, and so banks are also trying to be careful about how much they raise. You just raise capital from investors, and so dividend is actually giving capital back to them. So it kind of looks like you're giving them back what you raised, right? But of course, the reason why banks are raising capital is because the central bank is not including retained earnings as one of those as the capital that they want banks to fortify. And so again, to those who are expecting banks to pay more capital, they are saying, look, if you have so much retained earnings, why don't you just release most of it as capital? But nevertheless, doesn't mean you can underestimate the amount of dividend they are paying. 5 naira per share, a significant amount of dividend, and also shows dividend growth. 5 years ago, Janet was paying 3 naira in dividend as well. So I'm a dividend investor, so I love dividends a lot. Strong number as well. More importantly, also looks like the share price appears to be slightly undervalued. Imagine a stock that is trading at less than 2 times its earnings per share. That is just astonishing. Suggest that is pretty cheap, at the moment. And that dividend that they're paying is also coming at a dividend yield of slightly over 10%. So those are quite solid fundamentals for anybody who, particularly for anybody who likes fundamental investing. It's always one of those things you want to look out for when you want to invest in companies and buy them at what you call a steal.
Okay, Ugo, I have three questions for you in 2 minutes because we've come to the end of the program actually, and it's really so, the time just blew so fast. Let's take a
Yeah,
look
it
at
does.
how, yes, how the bank should ensure that it continues to serve as a pillar of stability. And I know why I'm asking this as the largest in terms of tier one capital. Then its readiness for 2026, a recap on what could actually be the future outlook for Zenith Bank moving forward.
I think that the bank would always continue to do what it has always done. Its strategy of
Or should it do
serving
better?
is,
Is it that, are you, if you're a
yeah,
lecturer, are you
yeah.
giving
So
them 100% to go?
yeah, I mean, with those, if you look at the numbers, record profits
Numbers
of
don't
over a
lie, isn't
trillion,
it?
what else? What else do you want? Earnings per share at 32.9 naira. If I'm ever gonna criticize anything I've seen here, it's the fact that the share price is a little depressed. I mean, because if I was the MDC, I'd be worried. I'm like, look, with all these good numbers, why is my share price not moving? Right? Why are investors not rewarding me with capital appreciation? Because that's what you want to see with those sort of numbers, right? But maybe that speaks to a larger issue, with the capital market. But if there's anything that maybe the bank want to probably do is maybe look at the retail end. I think that's one area the bank
Okay.
maybe suffers a little bit. Yeah, the retail end of the market. It's a bank that has always been traditionally strong on the corporate side and the HNI side. But the retail end, there's huge play there, especially with lower cost of funds. You have lower cost of funds in the retail end compared to the corporate and the HNI end, and that's probably where you might want to see the bank playing. And then of course, I think the bank also has a huge lot of role, a huge also has to innovate a lot better than it currently is. It is innovating, but I think it can innovate a lot better. So the
Okay.
challenges it had last year with this tech, it can improve in 2026,
Okay.
2025 and 2026.
Ugo, I think we have to leave it at this. Perhaps you said it's not a women's month anymore, but hey, a woman
It's
is
a
leading
woman's
the
month.
bank.
Sorry, it's a woman's month. Of course.
A woman is leading the bank, you know. Dr. Adora Umoji, OON, I must say. So what do we expect? When you give women positions of leadership, they tend to do more. But anyway,
Yeah, some of us were very happy with her
yeah,
coming in. I mean, knowing her background,
yeah.
we did expect that her numbers would come out solid, and I expect that. I mean, she will continue to produce solid numbers on and on from now on.
Okay. Thank you, Ugo. I'll see you again very soon, you know. Thank you.
Always, always, always.
Have a good weekend. I've been speaking with Ugodre Obi-Chukwu. He's the founder and chief executive officer at Nairametrics. I've been looking at Zenith Bank's financials full year 2024. So much to chew. I hope that you've taken a lot of things from this interview. I will see you all again next week. You know that the show is on Monday to Friday, and this is the best place to be when it comes to business, finance, market, and investment information. I am Nancy Naji. Be the best you can be and be the change that you want to see. The news is up next. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.